Now let's look at this question. An asset register showed a carrying value of 67,460,000. A non-current asset costing 15 million had been sold for 4 million, making a loss on disposal of 1,250,000. No entries had been made in the asset register for this disposal. What is the current balance on the asset register? Okay, so you are given four answers. So let's look at this question. Let's prepare a T account for disposal account. Okay, let's take a disposal account. And we'll take the carrying value of the asset register was 67,460,000. So the carrying value was 67,460, 67,460,000. So carrying value means the cost less the accumulated depreciation. Okay, please remember that the carrying value. A non-current asset costing 15,000 had been sold. So when the asset was sold, so that asset will be transferred to the disposal account. So let's assume it's 15 million. We'll take in thousands. Okay. So what will happen is you will have to credit the non-current asset and you have to debit the disposal account. Okay. So you can say non-current asset account credit and disposal account debit. And it had been sold for 4 million. So when you sell, you debit your bank account and credit the disposal account. Okay, so bank account, you can say 4 million. Making a loss on disposal of 1,250,000. Now you are not given the accumulated depreciation. You need to identify that. So how do you identify? Just take the loss. If it is a loss, you need to debit the profit and loss account. Okay, so in order to debit profit and loss account, you should credit your disposal account 1,250,000. So this is, you can say, profit or loss. This is a loss. Okay, so the difference between these two will be the accumulated depreciation. So how much is that? 50 million minus 4,000 minus 1,250. So that should be 9,250. So this will be the accumulated depreciation. So when you dispose any asset, what you need to do is, first of all, you need to transfer the cost from the non-current asset and the accumulated depreciation from the accumulated depreciation account. Okay, so now since you need to identify uh, the correct balance after disposal in the asset register. So at this asset register shows the carrying value. It had a carrying value of 67,460. Now what is the carrying value after this adjustment? After this adjustment, this disposal. Okay, so since there is a disposal, the cost was 15 million and the accumulated depreciation was 9,250. So what is the carrying value of the disposal? What is the carrying value of the disposal? Simply you take 15,000 cost and the accumulated depreciation 9,250. So thereby you can find out the carrying value of the disposal, which is 5,250. Okay, so therefore what is the carrying value after the disposal? So the opening balance was 67,460,000. Now you need to deduct the carrying value of the disposal, which is 5,250. So once you get this, once you simplify this, 67,460 minus 5,250, so that will be 62,210. Okay, so this should be the answer. So 62,210,000. So therefore the correct answer should be D, 62,210,000. Now let's look at this question. Silver company purchased an asset for 100,000 rupees on 1st January 2011. It had an estimated useful life of 5 years and it was depreciated using the reducing balance method at a rate of 40%. On 1st January 2013, it was decided to change the method to straight line. So what is the carrying amount of the asset on 31st December 2013? So you are given 4 answers. Okay. So first of all, we'll take 1st January 2011. The purchase, the asset value was 100,000. And the useful life is 5 years and they use reducing balance method. So when you calculate 31st December 2011, so what should be the depreciation and the carrying value? Okay, so this is depreciated on 40%. Okay, so therefore the depreciation will be 40,000 in the first year, 31st December, then 31st December 2011. Since this is based on the reducing balance method, so you need to take the net book value. So net book value end of 31st December will be 100,000 minus 40, 60,000. Okay, so on this 60,000, 40% will be how much? 24,000. So what is the net book value at the end of 2000? This is 2012. Sorry, 2012. So end of 2012 will be 36,000, the net book value. Okay. So on 1st January 2013, so after 31st December 2012, on 1st January 2013, the depreciation method was changed. This was changed to straight line method. Straight line method. Okay. So the written net book value was 36,000. So 31st, if you want to calculate 31st December 2013 depreciation, so how do we calculate? We have to take 36,000 divided by the number of remaining useful life. So since this was depreciated for 2011 and 2012, 2 years, the remaining useful life is 3 years. So this is the remaining useful life, because the useful life of the asset is 5 years. Okay, so therefore when you calculate based on the straight line method, you take the net book value and divide by the number of the remaining number of years. So that will be how much? It will be 12,000 per annum. So what is the question? What is the carrying amount of the asset on 31st December 2013? So carrying amount will be how much? 36,000 minus 12,000. So that's going to be how much? 24,000. Okay, the correct answer should be answer A.